Good evening, everyone. Welcome to our California Dream for All Shared Appreciation Loan Program info session. It's great to be with you this evening. I know we have quite a few attendees that are going to start joining tonight's class. This is the third class that we've taught on the info session or on the California Dream for All program. We want to get as much information out to our communities because I think this is just a really unique but important product that is going to be an opportunity for us to really help serve our communities that much further in homeownership. I know many of you that are attending tonight's class probably have seen some of the information online, whether on your searches or maybe looking at social media posts. And the design of this info session is make sure that you're getting the right information. So as you decide to take that next steps on your path towards homeownership, you have all the information on the California Dream for All program. In case we haven't got a chance to meet, my name is Jason Meda, and I'm the branch manager for our American Pacific Mortgage Office located in Sacramento. This is kind of our home base. We service the entire state with the CalHFA program. We're very fortunate enough to be the leading provider of the CalHFA program. So if you look at the Hero Lending page on the CalHFA site, we're the #1 lender there. So we really try to do our best to help educate our clients about this product. Make sure that they understand, what to expect and know what their options are, and kind of help guide them through the process and create that great client experience. And then, give them all the details that they need to know about this program, because with the California Dream for All program, it's fantastic, but I think you need to understand the mechanics of it. Now, a little bit about me. I've been in the lending business for over 20 plus years, probably emphasis on the plus, but really love what I do. I get a chance to educate clients in what's probably going to be one of the largest purchases they make in their upcoming financial futures. We teach educational classes once a week here from our office for classes all across the country in first-time homeownership. So really proud of what we do in our work in our local communities. We've helped hundreds and hundreds of buyers achieve the dream of homeownership. Now, in case you don't know what CalHFA is or what it stands for, CalHFA is the California Housing Finance Agency, and it was established in 1975, designed to create affordable housing for our local communities. It's focused on affordable but sustainable homeownership. So it's designed to help support our first-time home buyer, especially in a high-cost state like California, help achieve homeownership. So the California Dream for All program is going to launch March 27th. Many of you have seen the letter that's come out from CalHFA. We've been talking about it in our classes for the last, 4 or 5 months, because I had an opportunity to be a part of some of the project development team with this product. And I think it's just a fantastic resource for first-time buyers. And so tonight, I want to explain to you a little bit about how CalHFA, California Dream for All Shared Appreciation Loan, can help you achieve homeownership. And in tonight's class, we're going to talk not just about the product, but we're going to spend some time answering your questions online and then kind of sharing with you a little bit about the process of buying. So if you do decide you want to take those next steps and get qualified for this program or any other products that we offer, you'll kind of know what those next steps look like. Now, I do know we have some existing clients that are on tonight's class. In fact, some of you I talked with earlier today on your consultation encourage you to come check out tonight's class. So I'm glad you could join us. And then for those of you that are new clients or thinking about being qualified on this program, we'll again kind of share with you what those next steps look like. So here's what the California Dream for All Shared Appreciation Loan looks like. So it allows you to get up to 20% of your sales price in assistance to help with your upcoming home purchase. Now, that 20% that you receive is based upon either the purchase price or appraised value, whichever is less. That 20% is a no interest loan that does not require repayment until you either sell your home or if you refinance in the future. Now, you're going to learn a little bit more tonight that there is a one-time refinance option that allows you to refinance one time without having to pay back that assistance program. We'll talk more about refinancing in just a little bit later. You can split up a portion of that assistance, the 20% that you receive. So if you don't want to have all 20% go towards your down payment, you can take a portion of that and use as little as 17% towards your down payment. The other 3% you could use towards closing costs. Now, this is a 1-to-1 equity appreciation share. So here's what that means. If you don't need or want the full 20%, you can take a lesser amount. For example, let's say I only want to take 10% and maybe put another 10% down out of my own pocket. Then the equity share would be 10%. And I'm explaining to you what the equity share, we have a graphic that we'll share tonight that shows you a little bit more about that. Now, if you qualify under low income housing, so that's any of our clients that make less than the median income in your local community where you're going to buy, then if you access the full 20%, your equity share or appreciation share is only 15%. Okay, so I'm going to walk you through some examples of what that looks like for you in just a minute. Now, let's talk a little bit more about the kind of the characteristics, if you will, of this program. Now, just to emphasize, this is not a forgivable loan. There's a program last year called the Equity Builder Loan that had a forgivable feature. After 5 years, it was completely forgiven. This does not have that feature. This is a no interest loan that you're getting from the state. And the repayment of those funds is triggered by, like I said, either a refinance or the sale of a property. And the other component would be is if I did neither one of those triggering events, then at the end of 30 years, the assistance would be due back plus whatever the appreciation share is at that time. As I mentioned earlier, there's that one-time exception for refinance if you're able to lower to an interest rate. And, you know, refinancing a home, it does not come without a cost. So when we look at refinancing options down the road here for our clients, we want to make sure that they can have a good return on their investment. Just as a high level, typically refinancing will cost anywhere between $3,500 to $4,000. So on average, we want to make sure clients are at least saving maybe $200 to $300 a month to have a reasonable recoup period for a refinance. Okay, one question that comes up is that if there's no appreciation, if my home goes down in value, do I still have to pay back the 20%? The answer is yes. So you still owe the no interest 20% assistance. However, if the home goes down in value, there of course would be no appreciation. So therefore there would be no appreciation to share in. You must occupy the property for a minimum of 12 months to be eligible for this program. And the loan limits for the program are based by county. So the standard conforming limit is 726,200 across the country. However, in certain areas in California, there's what we call as high cost areas. So let's take, for example, if I'm going to buy a home in Santa Clara County, the maximum loan amount is $1,089,000. So this program will stretch all the way up to $1,089,000. For those buyers in those high cost of living areas. So I know we do have audience members joining us from all over the state, whether you're in Southern California, Northern California, the Central Valley. I do realize there's going to be some differences there. You know, if I'm in Fresno, for example, we'll be at the 726,200 conforming limit amount. Okay, let me show you an example of how this program works with the California Dream for All. So typically for first-time buyers, let's say I was buying at a $450,000 price. Usually my minimum down payment in most cases is going to be 3%, which would be $13,500. Now, when we coach clients on their home buying plan, we generally recommend that your closing costs are probably going to be 2 to 3% of your purchase price. So probably maybe $9,000 to $13,500. So in most cases, if I'm putting just the minimum amount down, my expected out of pocket will be anywhere between $22,500 to $27,000. Now, keep in mind, when I put less than 20% down, I'm going to have mortgage insurance, which also obviously makes the mortgage a little more costly. Just as a side note, mortgage insurance, in case you haven't attended one of our classes before, mortgage insurance is going to be based upon your credit score, what your down payment is, and then how much you finance. So the more I put down, the higher my credit score, the lesser my mortgage insurance is going to be. But the great news is if you elect to take the full 20% with the California Dream product, you have the opportunity to eliminate mortgage insurance because you're putting the 20% mark down. Now, as you can see on this slide, the Dream for All program only is compatible with a Fannie Mae conventional loan. So for clients looking at the FHA product, this would not be compatible, nor is it compatible with any other assistance programs. This is a standalone assistance program. Now, if we take the same $450,000 purchase price scenario, and let's say we put that 20% in as our down payment, now we have $90,000 in assistance. So I do have the opportunity to split that up towards closing costs if I want to, but if we can, and I would really recommend if we can get that all towards our down payment and save up enough funds to cover our closing costs, then we're able to decrease our monthly payment, because you're going to finance less, and then of course eliminate the need for mortgage insurance. So that out-of-pocket expense could be as little as zero, right? Or maybe $12,000 to $14,000, depending on what those closing costs might look like. Now, when you purchase a home, and we're going to talk about the process of buying, because many of you haven't attended a class in the past or gone through a consultation. When you go through the home buying process and you have an accepted offer, you are required to make an earnest money deposit, which is your financial investment into the transaction. So when we talk about zero amount out of pocket, we're talking about cash to close, which is the very end of the process. Initially, you will still need some type of funds up front. Usually that earnest money deposit is 1% to 2% of our purchase price. So I forgot to mention as we kicked off tonight's class, we're going to take questions as I roll through tonight's content. The design of the workshop tonight is 30-minute class, but we're going to take as many questions as we can on air, and then we'll stay around for Q&A later on. But I did have a question come in, which I think is really important, and that is, can I use the program to buy land and on a modular home? So you can't purchase those individually, or separately. You can't purchase the land and then purchase a modular home with this type of product. In some cases, a modular home that is already affixed to land, so it's an existing structure, can be allowed to finance on this product. This product will allow single-family homes, condos, townhouses, manufactured/modular homes that are already affixed on land that is owned. So you can't use this to purchase like a mobile home in park or anything like that. Those type of properties are considered personal property. All right, so I promised you a graphic to kind of show you how the appreciation share works. This graphic is provided by CalHFA, which kind of illustrates the point of the shared appreciation. So let's kind of start over here. We're going to assume that we're going to buy this home for $500,000. We're going to use 20% or $100,000 from the assistance to put down as our down payment. So we're going to finance $400,000. Now that's what our purchase looks like, right? So in that kind of scenario, I just have, in essence, my closing costs out of pocket. Now, let's say 5 years later, which this is probably a little bit of an aggressive value increase, but let's say 5 years later, my home now goes up to $640,000 and I decide to sell. So I trigger the event of a sale. When I sell that home for $640,000, I'm now going to owe back the $100,000 interest-free that I received from the state. And then the appreciation, which was $140,000, 20% of that appreciation share will be returned to the state. So now I pay back my $28,000 of my shared appreciation plus my $100,000 that I received in assistance. So in that case, out of my proceeds, $128,000 would be received back by the state. So let me just kind of show you what this looks like. So we sell the home, we pay back $128,000. My equity was $142,000, my leftover proceeds, and then I have my mortgage balance that's here. Now, what's not factored in and computed into this equation is when you do sell a home, you do have closing costs as a seller. So you'll have to pay for realtor fees plus other closing costs as a seller. But what we want you to take away from this is the understanding of the appreciation share and what that looks like for you. Because I have to say, we've seen some information online that's incorrect from in our local communities about just how this appreciation share works. So I think it's really important for you to understand this, because while I think it's an amazing opportunity to have 20% assistance, I think as a consumer, we really need to understand, what the long-term effect is for us and the triggering events for the shared appreciation. So here's an example, just another graph to kind of show you, looking at average appreciation, we took 4% average annual appreciation. As you take out this loan here, your loan will decrease over time as you make monthly payments. So as that loan decreases, your home value should go up, and that separation creates more equity, right? So as that equity grows, that 20% would go back into the dream fund. And then whatever is remaining is your equity or proceeds that you would have, hopefully, to purchase that next property. The design of this product, again, is to create sustainable and affordable homeownership in our local communities. And at the same time, depending on when you decide to sell your property, there is an amazing opportunity to have a really sizable amount of proceeds to be able to use for the next purchase of your home. Now, there are some minimum eligibility requirements for this program. So it's a minimum 660 credit score for low-income housing clients, 680 for clients that are above the 80% median income level. For any clients that are less than 700 credit score, the maximum debt to income ratio is 45%. In case you haven't attended one of our classes, debt to income ratio means your gross pre-tax income versus your monthly obligations, personal loans, credit cards, student loans, maybe your new mortgage payment. That gets factored into the debt to income ratio. This also has income limits, and those income limits are based by county. So we gave you kind of just a sampling of what those look like across the state, so you can get a sense there. These income limits go up to 150% the median income. So they're far more flexible and lenient, I guess, than what you see with typical first-time buyer programs. So it's just a much more inclusive program, which allows especially some of our dual income earner households or just higher income earners to be able to be a part of this program, because we understand the challenges with savings to be able to purchase your home. And I think this is where that program really helps provide that much needed opportunity. Now, a first-time home buyer is someone that has not lived in a primary residence in the last 3 years. So I may have purchased a home in 2010, sold it in 2018. I've been renting for the last 4 or 5 years. Now I'm still considered a first-time buyer. And the eligible properties, I've already kind of talked about it, but I'll kind of just recap again. Single-family homes, that could be new home or resale homes. We have several clients that are already, looking at new homes for this type of product. Condos, townhomes. Keep in mind, if you are considering a condo or townhome, as we're designing your home buying budget, we want to factor in those HOA fees as part of your monthly budget. Some below market homes can be eligible. So certain communities, Sacramento, for example, has affordable housing. In some cases, those properties will work, but we need to look at some of the deed restrictions on below market homes just to make sure they comply with what we're doing with the California Dream for All program. And then we've already talked a little bit about manufactured homes and the requirement for those to be on land that is owned. Okay, before we go into the process and get into our Q&A, I don't want to, skip over some of the other programs that are available with CalHFA, because some of you may look at the appreciation share and say, maybe that's not the best fit for me, even though I can still get the down payment. There is other programs that we've helped clients with over the last several years from CalHFA, including the My Home Assistance program. Provides up to 3% assistance for a conventional loan, 3.5% for an FHA loan. The difference with that is it is a deferred payment at a 1% simple interest. So you don't have to pay that back until you either sell the home or if you refinance in the future, but it does not have the equity appreciation share. And then for closing cost assistance, there's the ZIP assistance program that provides up to 2 or 3% of the loan amount in assistance at 0 interest. If you're interested in one of those programs, it does first start with the My Home Assistance program. You do have to elect that program. And then if you want to add on closing cost assistance, you do have that option as well. I'll be honest with you, in today's market right now, where we've seen kind of a little bit of volatility in interest rates, the ZIP program tends to be a bit more expensive. When we add that on, today's rate for the My Home first mortgage was 6.375%. Whereas on the ZIP program, we see that elevating into the mid 7% range. Just to show you a quick example on this product. I don't want to create any confusion with this over the California Dream for All program, but here's that same example, $450,000 purchase, conventional loan. I put together the same financing options, but utilize the 3% assistance. Now we can have the $13,500 from the My Home cover the minimum down payment, and then maybe I can put closing costs out of pocket, or perhaps use that ZIP assistance if it worked in our budget. Keep in mind, again, when we get to that 3% level of down payment assistance, then we put ourselves in a mortgage insurance position. Okay, I know many of you have not attended one of our homebuyer classes or done a consultation with us, or maybe received our homebuyers plan. So I want to just walk you through the 6 steps of home buying, because many of you that are like kind of learning more about the California Dream product, you may say, where do I go from here after I've kind of learned this stuff? Because I'm pretty interested in the product, but I just don't know where to start. And so this is the 6 steps of home buying. And the first step is a pre-approval. Now, before that pre-approval happens, there's a consultation that we complete for every one of our clients that's out shopping for homes. It's a one-on-one with me to help design your home buying plan. That's about a 30-minute session. To start that process, we send you what we call as our Get Started email. It's a real simple online application. We do a soft credit check, and you'll see some more information on that in just a bit. You need to upload proof of your income and assets. And then we schedule your time for your video consultation. You can schedule a call or a video time that works best for your schedule. So the output of that consultation is to be pre-approved. A pre-approval usually lasts 60 days, but we can always recertify that pre-approval at any time. Okay, so that's step one in the process. Step two is house hunting, and that's where you get a chance to partner with a realtor. What's really great is we have preferred realtors all across the state that we trust with the experience they're going to create for our clients. Realtors are paid for by the seller, so we always encourage you to take advantage of that resource. Once we've designed your pre-approval, if you decide to make an offer on a house, we'll update your pre-approval if you so choose to match the offer price of that home. Now, let's say you submit an offer to a seller and they accept that offer. Now we move to step three, and that's called entering escrow, because now we have an accepted offer. The escrow process usually is about 30 days. So from acceptance to when I get the keys to my house, it takes about 30 days. With this program, especially with California Dream for All, for our clients that are starting to shop with this program, we definitely want to go with a 30-day escrow right now. As we get in more into the program and we understand kind of the fluidity of the program, we're going to go ahead and start shortening escrow time periods. But as a rule of thumb, it's a 30-day escrow time period. Now, within a couple hours after your acceptance, our team's going to reach out to you, say congratulations, and then talk to you a little bit about next steps in the process and schedule you for your follow-up consultation. And that's where we design your financing together, review interest rates. We get a chance to kind of go through what the framework of your financing is going to look like, and just make sure you feel comfortable with kind of what's expected with your financing. Now, a question just came in about, is there a disadvantage to doing a 60-day escrow instead of maybe the traditional 30-day escrow? There's no real disadvantage to that. I think it's really just a matter of personal choice. I think the disadvantage may be not as a competitive offer for a seller. They may be as concerned, but certainly a 60-day escrow is something that's definitely allowed. It's just not typical in the market. Generally, there's a 60-day escrow because maybe the seller needs more time, at least what I've found. Now, we're now kind of in a buyer's market, so to speak. So I think it's just a different look in the market than what we saw 6 months ago. Now, within 2 to 3 days of your accepted offer, you're going to be required to make what we call as an earnest money deposit. That's usually 1 to 2% of your purchase price. That is out-of-pocket expense. And I think it's really important to understand that the assistance funds that you receive do not cover that earnest money deposit. You will be expected to have that money up front. So even though you may elect an option that allows you to have all your closing costs and your down payment covered, you're still going to have to put that money out of pocket. So that's a question we get often. Now, you could potentially get enough assistance to get that deposit back at the end of the process, but you will be expected to make that earnest money deposit of 1 to 2%. After you've done a follow-up consultation with us, we're going to send to you your initial disclosures. That highlights that interest rate, your payment, your total out-of-pocket expense, so you know exactly what to expect with your financing. Now, once that is done, we'll have your appraisal ordered of your property. Your realtor will order inspections of your house, and you have a variety of different inspections you can select. Here's what the earnest money deposit looks like. Again, it's 1 to 2% of your purchase price. Those funds count towards your total out-of-pocket expense. And the deposit is protected within what we call the contingency period. Now, the contingencies as a buyer allow you to do your homework on the property. It's usually in the first 14 to 17 days of the contract. So if I'm at day one today's what, the 16th of March, and I have a 14-day contingency, that means I have up until March 30th to do all my due diligence on the property. So that'll include getting my house appraised, which as a lender, we'll order that for you, getting your house inspected, and then of course, getting your loan approved. Okay, so that'll happen within that 14-day period of time. I will say contingency periods are a little shorter right now. Usually we see them at around 10 to 12 days in time period. Step 4 is going to be the processing and the underwriting of your loan. That's all the administrative tasks we do behind the scenes. Prior to step 4, especially in this market, we'll probably have, your rate lock secured, unless you decide that you want to kind of, see what the market's doing. We've seen a lot of movement in the market as of late, especially probably many of you have seen what's going on with the recent changes with SVB Bank and of course with Signature Bank. And so we've seen rates kind of come down over the last week. But at step 4, the underwriting process will begin. The underwriter will approve that loan at step 5. And by that time, we're about 3/4 of the way through the process. And at step 5, we're going to issue to you a final closing disclosure, and it gives you a 3-day cooling off period before we get to the very final stage called closing your loan. And that's where we sign final documents in person with the public notary. In fact, we have clients that are signing right now for their home purchase. And so that happens all throughout the day. At that time of signing, you will then wire in your funds for your final closing. Once that happens, on the lending side, we wire in the funds for the mortgage. Of course, if you're going to do the California Dream for All program, we wire those funds in as well, because we're basically funding the loan on behalf of the state. And once those funds are received, the escrow team will record documents with the county recorder's office. They record a grant deed, transfers ownership to you. They also record a deed of trust, which is your agreement to repay the loan. And once we get confirmation of those items recording, then you become the official owner. So, and then we get a chance to celebrate. Huge accomplishment. We always like to send our clients a housewarming gift to celebrate the big occasion, because it's a big deal. And so that's kind of what that process looks like. One of the questions that comes up, and I want to kind of backtrack a little bit, because many clients are asking, well, how do I get reserved for the funds for the program? So if we were to look at this process here, getting pre-approved does not reserve your funds for assistance programs. Your funds cannot be reserved until you have an accepted offer here at step 3. And of course, the program being open. So the program's not going to open until March 27th. At that time, we reserve you with the state, and then we lock in your interest rate. So until that happens, it is a first come, first serve basis with the program. So, we encourage you to, go at your pace, but certainly understand that, we don't know what the runtime is going to be for some of these programs that we're offering, because there's a limited amount of funds that are set up for this program this year. It's only $150 million that's available this year. And as we look across this entire state, which is obviously a large state, and many home buyers are interested in this program, those funds may deplete quicker than we expected. Going back to a consultation, here's what your home buying game plan looks like. So we always start with a soft credit check. So that won't impact your score at all. We're going to talk about budget and overall affordability. Where are we looking to buy? Are we looking at a new home or a resale home? What type of property are we looking at? Go through the details of your application and just design a plan that's going to be, like I said, affordable and sustainable for you. Now, if you haven't got a chance to meet with us in ahead of this session, if you want to kind of just connect with us for calls about the program, what next steps look like, maybe some different credit scenarios, we encourage you to set up an introductory call. If you're ready to take the next steps in the process because you haven't quite submitted your information, then we would go ahead and begin with the get started information. So you would complete an online application. You would upload those documents. And then, like I said, you would schedule a consultation. We'll send you the get started information as a follow-up to tonight's presentation as well. So you have that. And then you would just click on this link to be able to schedule your consultation. Now, some of our existing clients that have been pre-approved over the last couple of years have interest in this program as well. So if you're one of those in our audience tonight and you want to schedule a follow-up consultation, we probably already have your information on file. So you just need to schedule your consultation. And depending on how old your application is, you can just upload your current pay stubs as well as maybe your most recent W-2 to your profile and schedule your consultation, and we'll get that all figured out for you. Okay. I want to just mention a couple things before we go to Q&A that come up. There is education required for the California Dream for All program. There's 2 forms of education. There's 8 hours of standard CalHFA online education that you need to take. And then forthcoming, there will be shared appreciation training coming from CalHFA. I don't think that training is going to be available till March 27th. As soon as we know that it's available, we're going to send out to attendees from our classes that we've taught over the last couple of weeks. And of course, our existing clients will get that as well. Now, for some of you that have connected with us through our partnerships, or maybe you didn't even know we had these partnerships, we do offer a $750 discount for any alumni members of some of these universities that we partner with, as well as any state employees here in California. So we're really proud of our partnerships. In fact, we just taught a class for the University of Maryland earlier today out on the East Coast. And, those are things that we do to help kind of give back to our communities, to help kind of design and help people understand more about home ownership. And these consultations, just so you know, in case you haven't done one, that's a free service we provide. So it's not something that's an expense that's tied to that. So here's all my contact information. After tonight's class, if you want to just connect with me, feel free to email me, give me a call, or just schedule an appointment. We'd love to be able to make that happen for you. So I know there's a lot of questions out there, and we'll stay here until all of them get answered. So let's go ahead and dive in. And so let me go and take the first question. So if we are interested in a new construction that will take 6 to 8 months to build, do we risk not being able to take advantage of the Dream for All program? So not necessarily, because we can still reserve funds based upon having a purchase contract. So we have a lot of clients. I have clients I met with today that their new construction is not going to be due till August or done till August. As long as they have an executed purchase contract, they can reserve funds for the program. Now, typically, just so we're clear, the state generally has a 4-month lock period on interest rates. So there will probably have to be a longer term extension of your interest rate in order to protect the reservation for you. And we can talk a little bit more about that offline. Question around interest rates. So interest rates are unknown at this point. What we are quoting clients is the existing interest rates that are available on the CalHFA website, which today was at 6.375%. The California Dream for All program will have its own set of pricing available, and that'll come out on March 27th. There is an origination fee on these loans. There is origination fee on all loans, but these loans have an origination fee of 1.75%. Plus there is a processing and an underwriting fee. There is no discount points, but you do have the option if you wanted to buy discount points for your closing costs. In case you don't know, discount points allow you as a consumer to bring down your interest rate. 1 discount point equals 1% of your loan amount. And the goal there is to bring down your interest rate. 1% will generally equate to a 0.25% reduction in rate. Good question. So let's talk a little bit about timelines, because I think that's a question that comes up a little bit. And I've tried to get most of our communities ahead of the curve on this, because I know there's going to be a huge demand here. Obviously, you're seeing a lot of maybe, a lot of talk in social media, and maybe realtors are chatting with you about it. So we're actively meeting with clients right now and putting together home buying scenarios and plans and pre-approvals utilizing this product, so you can get kind of longer runway. The product is set to launch in 11 days. And so, with that, we want to make sure you have all the information available to you to make a good decision as a buyer or upcoming buyer. So that's kind of what the timeline looks like. Education, like I said, won't be available till March 27th. But that's what kind of that looks like. Question came in again, discount point cost. And so I think I reviewed that, but I'll share it with the group again. So a discount point is the equivalent of 1% of your loan amount. So if I finance $400,000, 1% of that is $4,000. The general rule of thumb is 1 point will equate to a 0.25% reduction in interest rate. Now, again, discount points are not standard with CalHFA loans. We can request what that quote would be from the state once you have a locked-in interest rate. So it varies day by day based upon changes in the market. So what we'll do is make sure we do a good return on investment analysis to make sure that buy down of rate makes sense for you, because generally it takes 4 or 5 years to break even in investments like that. And in today's market, who knows where interest rates are kind of going to go. This week we've seen interest rates come down with what's going on in the economy. Many of you that pay close attention to financial news, now there's talks that we may not see the Federal Reserve raising rates 0.5% at the next meeting. It may be 0.25%, it may only be just a total pause. So we'll kind of see what happens there. Okay, question is, on March 27th, will those with active applicants be updated with details automatically, or should we schedule a meeting? So So if you have an active application with us right now, we're already meeting with clients to update their pre-approval with the California Dream for All program. So I would encourage you, if you're already on file with us right now, definitely get a consultation scheduled. We've been meeting with clients every 30 minutes throughout the day to kind of redesign their home buying plans. But again, March 27th is the open date of the program. That doesn't mean the funds are reserved just by a pre-approval. You do have to have an accepted offer with the seller in order for your funds to be reserved. So that's why we're encouraging, clients to be diligent about, if you do want to move forward with the program, we'd encourage you to get your home buying plan built with us and get pre-approved. So, you can start your home buying search, because it's not going to be an infinite amount of time. There will be a timetable that these funds will run out. Okay, any other questions out there? These are great questions. I really appreciate that. And hopefully this is informative for you as you're making this decision for this product. And sorry for the background noise, of the joys of being downtown. All right. All of our content for our classes are all found on our YouTube channel, so we encourage you to subscribe to that. We will be teaching another class next Wednesday on the California Dream for All. So if you have friends, family, maybe some coworkers that are interested in this program, if they didn't get a chance to check out our YouTube channel, they can come to a live class next Wednesday. We're also teaching a full home buyers course on Tuesday for our Long Beach State alumni. So you're more than welcome to tune into that. You'll get a chance to learn a little bit more about what this home buying process looks like. Before we wrap up, income limit question came in. We'll post the income limit in the chat for you, and we can also send it in a follow-up. And somebody asked me to repeat the education requirements, so I'll do that before we wrap up. So it's 8 hours of CalHFA education offered through e-housing. And there's also appreciation share training, which is not available yet, but will be done soon, or will be available soon. And then the second part was, can this be done anytime? Yes, it can be done anytime. You can do the 8 hours education now, but we would ask that you, when you at least need to have it done by the time you have an accepted offer with a seller. And then another question is, will this program be available next year? It's slated potentially to be a part of the budget for next year. We just don't have a firm commitment on that at this point, because the funds that are used for this program are coming from the general fund of the state, not the CalHFA fund. So at this point, there is the possibility of for next year. I wouldn't necessarily commit to that because we haven't had the official announcement there. And then somebody asked, how do you prove you're an alumni from a particular college that you partner with? So we do that on the honor system. So we just, if you've said that you've attended one of those schools, we just believe that you've attended those classes or those schools. So just like our state employee discount, well, we can see that one because on your application it says if you work for the state, but yeah, it's just totally on the honor system. All right. I think we did it. Well, if I missed any questions or you have some follow-up items, feel free to reach back out to us. I hope this was helpful for you on your journey towards home ownership. Again, super excited about this program. Hopefully this provided some clarity for you so you know how to take those next steps. And I look forward to helping all of you in the upcoming days. Talk to you soon.